5 brothers, 5 cities. One family strategy that would finance empires, topple governments, and control the flow of money across an entire continent for 2 centuries. The Rothschilds didn't just build a banking dynasty. They invented modern international finance. And they did it by mastering one thing nobody else understood. Information travels faster than armies, but slower than carrier pigeons. Here's the number that breaks your brain. By 1825, the Rothschild family controlled more wealth than the combined treasuries of all European governments. Not one government, all of them. A single family held more liquid capital than France, Britain, Austria, Prussia, and Russia could collectively muster. They financed both sides of nearly every major European conflict for a century. They decided which governments survived and which collapsed. They created the bond market, the modern concept of creditworthiness, and the infrastructure that would eventually become the Federal Reserve System. But here's what nobody talks about. They started with absolutely nothing. Meyer Amschel Rothschild began as the son of a moneylender in Frankfurt's Jewish ghetto, forbidden from owning land, barred from most professions, and locked inside the ghetto gates every night at sunset. Within 2 generations, his sons would be dining with kings, deciding the fate of nations, and operating a financial intelligence network that made governments look like amateurs. This is the story of how they did it, how they exploited the chaos of the Napoleonic Wars to build an empire, how they turned revolution and war into profit opportunities, how they became so powerful that destroying them would have meant destroying Europe's entire financial system, and how their methods became the blueprint for every major financial dynasty that followed. We're going to trace the exact mechanisms they used, the moral compromises they made, the innovations they pioneered, and most importantly, the pattern they established that still governs how money and power actually work today. Because the Rothschilds didn't just build wealth. They built the invisible architecture that determines who rules and who serves in the modern world. Frankfurt, 1764. Meyer Amschel Rothschild is 20 years old and completely trapped. The Jewish ghetto, called the Judengasse, is a single, narrow street barely 10 feet wide, crammed with 3,000 people in 200 buildings. Jews cannot own land outside the ghetto. They cannot enter most professions. They cannot be outside the ghetto after dark or on Sundays and Christian holidays. They pay special taxes just for existing. They wear identifying badges. They're prohibited from farming, from military service, from holding public office. But Meyer has one thing. An apprenticeship in Hanover with the Oppenheimer banking house has taught him that old coins are worth more than their metal content to collectors. He returns to Frankfurt with 2,000 gulden borrowed capital and opens a shop dealing in rare coins and antiques. This isn't just numismatics. This is access. In 1769, Meyer makes the calculation that changes everything. Prince Wilhelm of Hana, who will become Wilhelm IX of his Kozel, collects rare coins. Meyer sends him a carefully curated portfolio with prices 20% below market value. The prince is intrigued. An invitation follows. Meyer doesn't just show up with coins. He shows up with information, genealogies of nobility, intelligence about other collectors, detailed provenance documentation. He makes himself indispensable, not through products, but through knowledge. By 1773, Meyer is appointed crown agent to the Prince of Hesse-Kassel. The title means nothing legally, but everything socially. He can now conduct business outside the ghetto. More importantly, he has access to Wilhelm's network. And Wilhelm is sitting on the largest personal fortune in Europe, 40 million gulden accumulated from renting Hessian soldiers to foreign powers. Britain alone paid Wilhelm over £7 million to use Hessian mercenaries during the American Revolution. Meyer sees what others miss. Wilhelm is rich, but paranoid. He's terrified of revolution, of theft, of losing everything. He needs someone who can move his money invisibly, who can make it grow while keeping it hidden. He has nothing to lose and everything to prove. Meyer positions himself as that man. In 1785, Meyer executes his first major transaction, arranging a loan of 800,000 gulden to the court of Denmark on Wilhelm's behalf. The mechanism is simple, but revolutionary. Wilhelm provides the capital. Meyer arranges the terms, manages the paperwork, ensures repayment. Wilhelm earns 6% interest. Meyer takes a 2% commission. But more importantly, Meyer now has relationships with Danish officials. He has proven he can move large sums discreetly. He has established creditworthiness. This is the pattern. Use one client's money to access another client's network. Earn trust through results, not promises. Provide a service nobody else offers. Absolute discretion, combined with cross-border coordination. By 1790, Meyer is handling multiple accounts for Wilhelm, managing investments across German territories, and building something unprecedented, an international intelligence network disguised as a family business. He marries Gotto Schnapper in 1770. They have 10 children who survive to adulthood, 5 sons and 5 daughters. The daughters marry into prominent Jewish banking families, creating alliance networks, but the sons become the weapons. Amschel, Salomon, Nathan, Kalman, later Karl, K., and Jacob, later James, are trained from childhood in languages, mathematics, codes, K., and one iron rule: the family is everything. Outsiders are useful but never trusted, and information is more valuable than gold. By 1800, Meyer has accumulated 800,000 gulden in assets. He is the richest Jew in Frankfurt, but he is still locked in the ghetto at night, still subject to special taxes, still forbidden from owning land. His sons are educated, ambitious, and suffocating. They need to escape the ghetto. And Europe is about to explode into chaos that will create exactly that opportunity. The year is 1803. Napoleon is reshaping Europe through conquest, and Meyer Rothschild makes the most important decision in the family's history. His sons will not stay together. They will disperse to 5 cities and operate as one coordinated organism. Amschel stays in Frankfurt to manage the home base. Salomon goes to Vienna. Nathan is sent to Manchester, then relocates to London in 1805. Karl goes to Naples. James goes to Paris. 5 brothers. 5 financial centers. 1 strategy. Here's the mechanism that made them unstoppable. Each brother establishes a banking house in his city. They communicate through coded letters sent via private courier, often using Hebrew or Yiddish mixed with the numerical ciphers. They share information about political developments, troop movements, commodity prices, and credit conditions. When Nathan in London learns that British textile manufacturers need cotton, James in Paris knows about French cotton supplies before anyone else. When Salomon in Vienna hears about Austrian government financial distress, the brothers can coordinate a bond offering before other bankers even know it's needed. But the real innovation is the bill of exchange system they perfected. Traditional banking required physically moving gold and silver across borders. Slow, dangerous, expensive. The Rothschilds create a network where a merchant in London can deposit pounds with Nathan, receive a bill of exchange, send it to Frankfurt, and Amschel will pay out in gulden. The gold never moves. The brothers just balance accounts among themselves. They charge 2 to 5% commission, but more importantly, they now control cash flow across borders faster than any government. In 1806, Napoleon's continental system blocks British trade with Europe. This should have destroyed trade. Instead, it creates the Rothschilds' first massive opportunity. British manufacturers desperately need to sell goods. European buyers desperately want British products. The Rothschilds become the smuggling coordinators, not directly, but financially. They arrange credit for smugglers, accept bills of exchange from blockade runners, and launder the proceeds through their 5-city network. They turn Napoleon's embargo into a profit center, generating £400,000 annually by 1810. Meanwhile, Prince Wilhelm of his castle faces disaster. Napoleon is conquering German territories. Wilhelm flees to Denmark in 1806, leaving behind his fortune. The question is, who can hide £3 million from Napoleon's occupation forces? Wilhelm trusts Meyer. Meyer hides some in secret locations in Frankfurt, but the genius move is what Nathan does in London. He takes the bulk of it and invests it in British government bonds. The bonds earn 5% interest. Wilhelm's money is safe from Napoleon and generating income. Nathan manages it all, taking a commission on both the initial transaction and the ongoing management. This is the moment the Rothschilds become indispensable. They are now managing the largest private fortune in Europe for a prince in exile. They are facilitating black market trade across Napoleon's blockade. They are lending money to small German principalities desperate for cash, and they are accumulating intelligence about every major political and military development in Europe. By 1810, the family's combined assets exceed £5 million. They're no longer coin dealers or niche bankers. They're operating a shadow financial network that functions regardless of wars, blockades, or political upheaval. They have created infrastructure that makes them impossible to exclude. Governments need them, merchants depend on them, and they share everything with each other while revealing nothing to outsiders. The moral compromise is already visible. They profit from war. They finance both sides when profitable. Smuggle to circumvent laws. They hide money from occupying forces, but also from legitimate tax authorities. They operate in legal gray zones across multiple jurisdictions, making them accountable to no single authority. The ghetto that once trapped them now becomes their strength. They are insiders nowhere. They can operate everywhere without conflicting loyalties. Nathan, operating from London, becomes the family's most aggressive actor. He is abrasive, direct, and ruthlessly efficient. He recognizes that Britain is the key. It's the only major power Napoleon hasn't conquered. Akana and whoever finances Britain's war effort will emerge from the Napoleonic Wars as Europe's dominant banker. Akana. By 1811, Nathan is already positioning to make that happen. The year is 1814. Napoleon has abdicated and been exiled to Elba. Europe celebrates peace. Nathan Rothschild sees war resuming within a year. He is correct. In March 1815, Napoleon escapes, returns to France, and raises another army. The 100 Days begin. Britain needs to pay its army and subsidize its allies on the continent. The problem: British gold cannot easily reach Belgium, where Wellington's forces are gathering. Ships are slow and vulnerable to French privateers. The British government needs £20 million transferred to the continent immediately. Its traditional banking houses, including the mighty Barings, propose expensive, slow solutions. Nathan proposes something revolutionary. He will buy gold in London, ship it to Paris through James, convert it to bills of exchange, transfer those to Brussels through private courier, and have the gold paid out to British forces in less than 2 weeks. It's the commission, 2% plus exchange rate advantages that Nathan controls. The British government accepts. This transaction alone generates £400,000 in profit and establishes Nathan as Britain's primary continental banker. But the real opportunity comes in June 1815. On June 18th, the Battle of Waterloo is fought. Napoleon faces Wellington and Blucher in Belgium. The outcome will determine Europe's fate. If Napoleon wins, French dominance returns, British bonds will collapse, and continental securities become worthless. If Wellington wins, British bonds surge and French assets crater. Here's what happened. Stripped of mythology. Nathan has established a private intelligence network using horse-mounted couriers faster than official government messengers. A Rothschild's agent is at Waterloo. The moment the battle turns decisively toward Wellington, the agent rides hard for Ostend, crosses the English Channel overnight on a Rothschild boat despite rough seas, and reaches Nathan on the morning of June 20th. 4 days before the official British government messenger arrives with Wellington's victory dispatch. What Nathan does next is where the legend gets built. The mythology claims he sold British bonds, causing panic, then bought them cheap, making millions when the victory was announced. The reality is more complex and more profitable. Nathan doesn't sell bonds to create panic. He buys bonds aggressively and quietly the moment he knows Wellington has one. British bonds are trading at 60% of par value due to uncertainty. Nathan, through agents acting on his behalf to avoid tipping his hand, buys £1.2 million worth of bonds at discount prices. When the official victory news arrives, 24 hours later, British bonds surge to 80% of par, then 90%, eventually reaching par. Nathan's profit on this single transaction is approximately £480,000. But the more important gain is reputational. The Rothschild intelligence network is faster than governments. Everyone on the London Exchange understands this now. However, the Waterloo mythology obscures the larger operation. Between 1813 and 1815, Nathan coordinates the transfer of approximately £42 million from Britain to the continent to pay coalition forces fighting Napoleon. Every pound generates commissions. Every exchange rate provides arbitrage opportunities. Every delay in government payments means the Rothschilds earn interest on float. The total profit from financing Britain's anti-Napoleon effort exceeds £7 million across the family. Simultaneously, James in Paris is providing credit to French merchants. Karl in Naples is lending to the restored Bourbon monarchy, and Salomon in Vienna is negotiating with Metternich's government. The brothers are hedging. If Napoleon had won at Waterloo, the family would have lost the British bond position, but retained French connections. This isn't patriotism. This is portfolio theory applied to geopolitics. The post-Waterloo settlement creates opportunities that dwarf wartime profits. European governments are bankrupt. Prussia needs loans. Austria needs loans. France owes massive reparations. Naples is rebuilding. Every government needs one thing: liquid capital. And in 1815, the Rothschilds have more accessible cash than any institution in Europe. The family makes a coordinated decision. They will become the primary underwriters of government bonds across Europe. The mechanism works like this. Austria needs 30 million florins. Salomon in Vienna negotiates the terms: 6% interest, 20-year maturity, bonds issued at 85% of face value. The Rothschilds buy the entire bond issue at 80% of face value, immediately earning a 5% spread. They then sell the bonds to investors across Europe through their 5-city network, charging another commission. Austria gets immediate cash. The Rothschilds earn on issuance, on distribution, and on the difference between wholesale and retail pricing. By 1818, the family has underwritten major bond issues for Prussia, Austria, France, Russia, and Naples. They have become the essential intermediary between governments that need money and investors with capital. They have created the modern government bond market, and they have accumulated wealth exceeding £50 million, making them richer than any single European government and wealthier than all but the largest nation-states. The fatal innovation is this: they have made themselves necessary. European governments cannot finance themselves without the Rothschilds' distribution network, credit rating, and investor confidence. Joining the Rothschilds would mean destroying the credit markets that governments depend upon. They have achieved what Meyer dreamed of in the Frankfurt ghetto. They are indispensable. The year is 1820, and the Rothschilds are building infrastructure that will define international finance for the next century. The 5 houses operate as one balance sheet split across 5 jurisdictions. When Nathan in London needs to fund a large British bond purchase, Salomon in Vienna can instantly provide gold reserves. When James in Paris extends credit to French industrialists, Karl in Naples can supply the backing. The family has created a financial organism that can mobilize resources faster than any competitor. The physical infrastructure is staggering. Each Rothschild's house occupies purpose-built buildings in the financial districts of their respective cities. New Court in London, purchased by Nathan in 1809, becomes the nerve center. The counting houses employ over 100 clerks just managing accounts. The courier network now includes 20 permanent riders plus contract agents, creating a private postal system faster than any government service. Messages travel from London to Paris in 36 hours, from Paris to Vienna in 72 hours, from Vienna to Naples in 96 hours. But the real infrastructure is informational. The brothers maintain detailed ledgers on every major European government, debt levels, revenue sources, political stability, succession risks, military strength, and most importantly, creditworthiness. When the King of Naples requests a loan in 1821, Karl already knows the precise state of Neapolitan finances better than the king's own ministers. When Austria needs emergency funding in 1822, Salomon can instantly assess their repayment capacity and price the bonds accordingly. The family creates standardized processes for government bond issues. A Rothschild's government bond comes with specific features: clear maturity dates, defined interest rates, negotiability on secondary markets, and implicit family backing. Investors learn that Rothschild bonds are safer than other securities because the family has the resources and motivation to protect bond values. If a government struggles to pay, the Rothschilds will often extend bridge loans to prevent default, protecting both the client government and their own reputation. This creates a virtuous cycle. Successful bond issues enhance Rothschild credibility. Enhanced credibility allows them to charge higher fees on subsequent issues. Higher fees generate more capital to back larger issues. By 1825, the family has underwritten government bonds totaling over £150 million, earning commissions averaging 4 to 7% on each issue. Geographic expansion accelerates. Nathan begins lending to the British government directly, becoming the Bank of England's largest customer and eventually its most important creditor. James becomes the dominant force in French finance, providing credit lines to French industrialists and underwriting French government debt. Salomon positions himself as Metternich's personal banker, giving the family direct influence over Austrian foreign policy. Karl integrates himself into the restored Italian monarchies. Even Amschel, less aggressive than his brothers, makes Frankfurt the family's central clearinghouse and repository for physical gold reserves. The vertical integration is total. The Rothschilds now control one primary bond issuance, secondary market trading through their own trading desks. 3. The courier network carrying bond certificates for the gold reserves backing bond redemptions. And 5. The intelligence determining bond prices. They are issuer, dealer, clearinghouse, and market maker simultaneously. Political influence naturally follows financial necessity. Governments that owe the Rothschilds money listen to Rothschild advice. In 1822, when Austria contemplates military intervention in Italy, Salomon warns that war will destroy their credit rating. Austria reconsiders. In 1823, when France debates defaulting on reparation payments, James explains that default means permanent exclusion from credit markets. France pays. The brothers don't dictate policy, but they establish the financial constraints within which policy must operate. The family also begins cultural positioning. Nathan's son, Lionel, and Salomon's son, Anselm, are educated at Göttingen University, studying with European elites. The family starts buying art, endowing charities, and constructing palaces. James builds a mansion on the Rue Lafitte in Paris that becomes a center of French cultural life. Salomon acquires properties in Vienna that rivaled the Habsburgs. This isn't vanity. This is social infrastructure. They are normalizing Jewish presence in Christian aristocratic spaces, making themselves impossible to exclude from the society that depends on their money. By 1825, the family's combined wealth is estimated at £56 million. Compare this. Britain's total national budget in 1825 is £55 million. The Rothschilds, a single family, control liquid wealth equal to the entire British government's annual revenue. They employ over 500 people across 5 houses. They have direct relationships with the heads of every major European government. They have created the modern concept of the International Investment Bank. But warning signs are accumulating. Competitors resent their dominance. The Barings in London, the Hopes in Amsterdam, and various German banking houses begin coordinating to challenge Rothschild monopolies. Governments appreciate Rothschild's efficiency, but fear Rothschild influence. Anti-Semitic propaganda begins circulating, portraying the family as a shadowy cabal controlling Christian nations. The family largely ignores these signals, believing their indispensability protects them. The Rothschilds have also created dependencies they don't fully control. When Nathan extends massive credit to the British government, he is betting on British stability. When Salomon underwrites Austrian bonds, he is betting on Habsburg competence. When James finances French industrialization, he is betting on FrenchPolitical.com. They have concentrated risk by making their fortune dependent on the very governments they helped create. The year is 1830. France explodes into revolution. Charles X is overthrown in July. Louis-Philippe takes power. The established order collapses. James Rothschild faces the defining choice of his life. The family has 15 million francs exposed in French government bonds issued under the previous regime. Revolutionary governments historically repudiate old regime debts. If Louis-Philippe declares the bonds void, the Rothschilds lose everything in France, plus the reputational damage across all their markets. Other bankers are liquidating French positions, fleeing Paris, writing off their losses. James has 2 options. Option 1. Join the exodus. Sell whatever French assets can be sold at fire sale prices, accept the loss, and focus on Austria and Britain, where the family is secure. This is the rational choice. The revolutionary government is unstable, potentially hostile to bankers, and ideologically opposed to aristocratic finance. Option 2. Double down, back the new regime before it's clear they'll survive, and negotiate to make the old bonds valid under the new government. James chooses option 2, but with calculated ruthlessness. He approaches Louis-Philippe's ministers immediately before they've established financial credibility. He makes a simple offer. The Rothschilds will recognize the new government, will publicly support it through bond purchases, and will use their European network to legitimize Louis-Philippe internationally. In exchange, the new government will honor the previous regime as bonds and grant the Rothschilds exclusive rights to the next French government bond issue. The calculation is pure opportunism disguised as loyalty. James understands that Louis-Philippe desperately needs legitimacy. European monarchies view him as a usurper. He needs international recognition. The Rothschilds can provide that by signaling to other governments that France is financially stable and creditworthy. James is selling political legitimacy. The new government accepts. The Rothschilds' 15 million francs in old bonds are honored. But more importantly, in October 1830, James underwrites a 25 million franc bond issue for Louis-Philippe's government. The commission is 7%. The bonds sell successfully across Europe, signaling that major investors accept the new regime. James earns 1.75 million francs in fees and establishes himself as indispensable to French stability. Here is the moral complexity. The revolution was partly driven by economic distress among French workers and peasants. The old regime's debt, which the Rothschilds forced the new government to honor, includes loans that financed aristocratic excess in foreign military adventures. By ensuring debt continuity, James prioritizes creditor interest over revolutionary aspirations for economic justice. The people who overthrew Charles X end up paying for his debts anyway. James doesn't just save his existing position, he expands it. Over the next 5 years, he becomes Louis Philippe's primary banker, financing French railway development, industrial expansion, and colonial ventures in Algeria. By 1835, the Rothschilds have underwritten over 150 million francs in French bonds, making them the dominant force in French finance. The family applies this lesson across Europe. When Belgium gains independence from the Netherlands in 1830, they immediately recognize the new government and offer financing. When various German principalities face constitutional crises, the Rothschilds back whichever faction seems most likely to win and most likely to honor debts. They are ideologically neutral and financially opportunistic. Nathan in London dies in 1836 at age 58, leaving an estate valued at £5 million. His son Lionel assumes control of the London house. The transition is seamless because the family structure transcends individuals. The brothers have created something bigger than any one person, an institutional dynasty. But the 1830 decision reveals the fundamental Rothschild philosophy. They will finance any government that maintains property rights and honors contracts, regardless of ideology, regardless of justice, regardless of popular will. Monarchy, constitutional government, revolutionary regime, they are all customers. The only unforgivable sign is default. This creates an interesting paradox. The Rothschilds, who emerged from oppression in the Frankfurt ghetto, are now financing systems that oppress others, oppress the Austrian Empire, which suppresses Italian and Hungarian nationalism. They fund the French regime that maintains colonial rule in Algeria. They fund the Prussian government that restricts Jewish rights in German territories. They have chosen financial success over solidarity with the oppressed. When asked about this, James reportedly said, "We are not politicians. We are bankers." This is technically true, but ethically evasive. Banking at this scale is inherently political. Choosing which governments to finance, which revolutions to support, which regimes to legitimize, These are political acts with enormous consequences, The family's choice is clear. They will preserve and expand their position within existing power structures, rather than use their wealth to transform those structures. They are conservative by financial necessity, even when that conservatism perpetuates injustice. The ghetto that birthed them is forgotten. The dynasty that survives is what matters. The year is 1840, and the Rothschilds stand at the absolute pinnacle of European financial power. The family's combined wealth exceeds £75 million. They control the government bond markets of Britain, France, Austria, Prussia, Russia, Naples, and various smaller states. They have financed the industrial revolutions, infrastructure, railways, mines, factories, ports. They are the wealthiest private family in human history to that point. The daily operations reveal the scale. On a typical day in 1840, the London house is managing £3 million in active positions. The Paris house is coordinating loans to 15 different French industrial concerns. The Vienna house is negotiating a 30 million florin bond issue for the Austrian government. Atia's house is financing trade throughout the Mediterranean. The Frankfurt house is clearing transactions among the other four. The 5 houses exchange coded messages, averaging 200 dispatches per week. Market share dominance is overwhelming. The Rothschilds underwrite 47% of all government bonds issued in Europe between 1835 and 1845. In France, the number is 63%. In Austria, 71%. They are not the only bankers. But they are the only bankers operating at continental scale with instant coordination and unlimited credit. The political influence is no longer subtle. When Egypt's viceroy, Muhammad Ali, threatens to attack the Ottoman Empire in 1840, triggering a potential European war, the Rothschilds intervene. James in Paris and Lionel in London coordinate with their governments, making clear that war will destroy credit markets and bankrupt everyone involved. They offer an alternative, a negotiated settlement guaranteed by Rothschild arranged loans to both sides. The crisis is resolved without major conflict. The family has functionally vetoed a war. This is an altruism. War destroys bond values, disrupts trade, and makes debt repayment uncertain. The Rothschilds have accumulated so much wealth in government bonds that they now have strong incentives to preserve European peace. They have become a conservative force in international relations, using their financial leverage to prevent destabilizing conflicts. The social integration is complete. Lionel D. Rothschild is elected to British Parliament in 1847, though he cannot take his seat because he refuses the Christian oath required of MPs. This becomes a decade-long battle that eventually forces Parliament to change the law in 1858. Salomon is given the Austrian title of Baron in 1822, making the family nobility. James builds the Château de Ferrières outside Paris, rivaling Versailles in grandeur. Karl's son, Meyer Karl, becomes the first Rothschild to marry outside the family in 1842, marrying into German nobility. Terribly, the family has diversified beyond government bonds. They are now dominant in one railway financing, holding majority stakes in French, Austrian, and German railway companies. To mining operations, particularly mercury and coal. 3. Wine production, with the Chateau Mouton Rothschild and Chateau Lafayette Rothschild estates. 4. Insurance, establishing companies in multiple countries. 5. Precious metal, refining and trading. And 6. Real estate, across major European cities. The employment impact is massive. The 5 banking houses directly employ over 800 people. The companies they control employ tens of thousands. Industries depend on Rothschild credit lines. When the family decides to finance a railway project, that decision creates thousands of construction jobs. When they extend credit to a manufacturer that keeps factories operating, they have become embedded in the economic machinery of Europe in ways that make them impossible to extract. But the concentration of power creates vulnerabilities they don't fully recognize. They have so much wealth invested in European stability that any major disruption threatens catastrophic losses. They have built empires on government bonds, but governments can collapse. They have financed railways, but railway bubbles can burst. They have accumulated assets that look invincible in 1840, but contain structural fragilities. The dependency relationships flow both ways. Yes, governments need Rothschild credit, but the Rothschilds need governments to honor bonds, protect property rights, and maintain order. If multiple governments simultaneously defaulted, or if revolutionary movements succeeded in repudiating aristocratic finance, the family's paper wealth would evaporate. They have created a system where their survival depends on the survival of the existing order. There are whispers of resentment. Other banking houses coordinate to challenge Rothschild dominance on specific deals. The Barings successfully compete for some British government business. The Hopes win Dutch contracts. German banks begin consolidating. The Rothschilds remain dominant, but absolute monopoly is slipping. Anti-Semitic conspiracy theories intensify. Pamphlets circulate claiming the family controls European governments, starts wars for profit, and manipulates currencies to destroy Christian nations. Most of these theories are paranoid fantasies, but they contain grains of truth that make them dangerous. The Rothschilds do influence government policy through their credit decisions. They do profit from instability. They do coordinate across borders in ways that transcend national loyalties. The family's response is denial and discretion. They refuse to publicly defend themselves, believing that engagement with conspiracy theories only amplifies them. They maintain intense privacy, revealing as little as possible about their operations. This works in the short term, but allows dangerous mythologies to grow unchallenged. By 1845, the family controls wealth estimated at £90 million. They have achieved everything Meyer dreamed of in the Frankfurt ghetto. They are nobility, dependable, they are indispensable. They are immortal, or so they believe. The architecture of their power seems unshakable. Within 3 years, it will face the greatest test in its history. The year is 1848, and Europe explodes. Revolutions erupt simultaneously in France, Austria, Prussia, and Italian states. Monarchies totter. Liberal movements demand constitutional government. Workers demand economic justice. Nationalists demand independence. The established order that the Rothschilds helped finance and stabilize is suddenly burning. In February, Paris erupts. Louis Philippe, the King James Rothschild, backed in 1830, flees to England. The Second Republic is proclaimed. James faces catastrophe. He has 40 million francs in French government bonds and railway stocks. Revolutionary governments traditionally repudiate aristocratic debts. Angry mobs are targeting banker properties. James receives credible threats against his life. James makes a calculation identical to 1830, but riskier. He stays in Paris. He immediately approaches the provisional government's finance minister. He offers recognition and credit lines in exchange for debt continuity. But the new government is more radical than Louis Philippe's regime. They are suspicious of bankers and hostile to aristocratic finance. They reject James's initial offers. James adjusts his strategy. Instead of offering to finance the government directly, he offers to finance French industry and employment. He extends credit lines to French manufacturers, keeping factories operating and workers employed. He finances railway construction projects that create jobs. He is essentially using his own capital to prevent economic collapse that would radicalize the revolution further. It's self-interest disguised as public service, but it works. By keeping the economy functioning, he makes himself useful to the revolutionary government, despite their ideological hostility. Meanwhile, Vienna explodes in March. Metternich, Salomon's patron and ally for decades, flees the country. The Austrian government faces insurrection. Salomon's position is even more precarious than James's because Austrian revolutionaries explicitly target Jewish bankers as symbols of aristocratic exploitation. Salomon evacuates to Paris, leaving trusted deputies to manage the Vienna house. In Frankfurt, Amschel faces riots targeting the Jewish ghetto. The family's original home is threatened. Amschel uses Rothschild resources to pay for security forces protecting the ghetto, and to provide emergency loans to the Frankfurt Senate to prevent total governmental collapse. This is openly buying protection with money, but it succeeds. Its Frankfurt house survives. London and Naples remain stable, giving the family to secure bases. Lionel in London continues operating normally, becoming the financial refuge for his brother's capital. Carl in Naples is isolated from the northern European chaos. But the real crisis is the bond collapse. Across Europe, government bonds plummet in value as investors fear revolutionary governments will repudiate them. Austrian bonds fall to 40% of face value. French bonds drop to 55%. Prussian bonds decline to 60%. The Rothschilds hold massive positions in all of these securities. On paper, the family loses approximately 30 million pounds of wealth between February and June 1848. The brothers make a coordinated decision that defines their character. They will not sell. Every other major banking house is liquidating government bonds to stop the bleeding. The Rothschilds do the opposite. They buy more bonds at crashed prices, betting that the revolutions will fail and governments will stabilize. This is either genius or insanity. The bet requires faith in two things. First, the European governments have the military force to crush revolutionary movements. Second, that once order is restored, those governments will honor their debts to maintain future credit access. The Rothschilds are wagering that the machinery of state power is stronger than popular uprisings. Throughout 1848, the family coordinates intelligence gathering across Europe. Their courier network tracks which governments are stabilizing, which revolutionary movements are fracturing, and which military forces are remaining loyal to established regimes. They are essentially running a private intelligence agency to inform their bond-buying strategy. By summer 1848, the revolutions are indeed failing. The Austrian military crushes Hungarian and Italian uprisings. The Prussian king dismisses the Frankfurt parliament. In France, the June Days uprising is brutally suppressed, and Louis Napoleon emerges as the dominant figure. Order is being restored through violence. As governments stabilize, bond prices recover. Austrian bonds climb back to 70% of par, then 85%. French bonds recover to 75%. Prussian bonds reach 80%. The Rothschilds, who bought aggressively during the panic, make enormous profits. Their loss of £30 million in February becomes a gain of £15 million by December. The moral cost is visible. The Rothschilds financially bet on the violent suppression of popular movements demanding democracy, economic justice, and national self-determination. When Austrian forces massacre Hungarian revolutionaries, the Rothschilds profit because Austrian bonds rise. When French workers are gunned down in Paris streets during the June Days, the Rothschilds profit because French bonds stabilize. Their wealth is built on the defeat of movements that might have created more just societies. James returns to Paris in late 1848 and immediately begins financing Louis Napoleon's consolidation of power. When Louis Napoleon stages his coup in December 1851, making himself emperor as Napoleon III, James is among his earliest supporters. The Rothschilds financed the Second Empire because it promises stability, property rights, and debt repayment. The 1848 revolutions transformed the family's strategy. They recognized that European governments need stronger tools of repression to maintain order. They began financing not just government budgets, but specific security infrastructure, expanded police forces, IMPROVED, rail networks for troop deployment, and better communication systems for coordinating state power. They are financing the tools that will prevent future revolutions from succeeding. By 1850, the family's wealth has recovered to £85 million and is growing again. They have survived the greatest threat to European order in a generation. But they have also revealed their fundamental conservatism. They will always back established power against popular movements, stability against change, order against justice. The ghetto is truly forgotten now. The year is 1860, and the Rothschilds are building vulnerabilities they don't recognize as fatal. The family's wealth has reached £120 million. They have survived revolution and emerged stronger. But their success contains the seeds of their eventual marginalization. The critical weakness is leverage concentration. The Rothschilds have accumulated enormous wealth, but that wealth is heavily concentrated in specific asset classes and dependent on specific political structures. Approximately 65% of their assets are government bonds. Another 20% is railway stocks and infrastructure companies. Only 15% is liquid gold reserves or diversified holdings. This means the family's fortune is a bet on three things remaining stable. 1. European governments honoring their debts. 2. Railway profitability continuing. And 3. The existing political order surviving. If any of these assumptions breaks, the family faces catastrophic losses. The railway exposure is particularly dangerous. Between 1840 and 1860, the Rothschilds financed railway construction across Europe, taking payment partially in railway company stock. By 1860, they hold major stakes in the Chemin de Fer du Nord in France, the Saarbrücken in Austria, and various German railways. These holdings are valued at approximately £25 million. But railway economics are deteriorating. Construction costs are exceeding projections. Competition is increasing. Companies are pressuring railways to lower rates. The expectation of guaranteed profits is proving illusory. Several smaller railway companies default between 1857 and 1862. Railway stock values began declining. The Rothschilds, who bought at peak prices, are sitting on unrealized losses. James in Paris recognized the danger and proposes reducing railway exposure. But the family structure, which has been a strength, now becomes a weakness. Decision-making requires consensus among brothers or their heirs. Solomon's son Anselm in Vienna opposes selling Austrian railway holdings because they provide political influence. Lionel in London argues that selling would signal lack of confidence, potentially triggering panic. The family debates for 2 years while the problem worsens. Meanwhile, a new generation of competitors is emerging. American banking houses like J.P. Morgan are building capacity. German banks are consolidating. The Rothschilds' informational advantage from their courier network is eroding because telegraphs now transmit information faster than any rider. By 1866, the transatlantic telegraph cable connects Europe and America instantly. It's completely eliminating the informational edge that built the Rothschilds' fortune. The family also faces succession challenges. The original 5 brothers are dead. The houses are now run by nephews and grandsons who inherited wealth but didn't build it. They maintained the family's operational expertise but lacked the revolutionary hunger that drove the first generation. They are competent managers of an existing empire rather than audacious builders of new ones. Political risks are accumulating unnoticed. The concert of Europe that maintained stability after 1815 is fracturing. Prussia is rising under Bismarck. Italy is unifying. Austria is weakening. France, under Napoleon III, is pursuing aggressive foreign policies. The Rothschilds have financed all these governments, but the governments are now following trajectories that will inevitably lead to conflict. In 1866, the Austro-Prussian War erupts. For the first time since Waterloo, the Rothschilds cannot prevent a major European war. More devastatingly, they have major bond holdings in both countries. No matter who wins, they face losses. Austrian bonds collapse after Austria's defeat. The Vienna house suffers significant losses. Its family's prestige as peacekeepers is damaged. But the structural vulnerability is deeper than one war. The Rothschilds built their fortune on financing governments. But governments are changing. The rising powers, America and Germany, are industrializing rapidly. Wealth is shifting from government bonds to corporate equity, from financing states to financing companies. The Rothschilds are organized and trained for sovereign lending. They are slow to adapt to corporate finance. American banking houses, particularly J.P. Morgan, are pioneering new methods, underwriting corporate stock issues, financing industrial consolidations, funding technological innovation. The Rothschilds viewed this as vulgar and risky. They remained focused on the dignified business of sovereign lending. They are becoming obsolete without realizing it. The gold standard system that benefited the Rothschilds is also creating problems. The family accumulated gold reserves to back their currency exchange operations. But as countries adopt the gold standard, national central banks become the primary holders of gold reserves. The Rothschilds' role as private gold intermediaries becomes less essential. In 1870, the Franco-Prussian War devastates France. Napoleon III is captured. The Second Empire collapses. James's son, Alphonse, is running the Paris house. He faces the same crisis his father faced in 1848 and 1870. But this time, the outcome is worse. France is defeated, occupied, and forced to pay massive reparations. French bonds collapse. The Paris house suffers losses exceeding £8 million. Crucially, the Rothschilds do not underwrite the French reparations bonds. The German banker, Gerson Bleichroder, working with Bismarck, handles the transaction. This is the first major European sovereign debt issue in 50 years that the Rothschilds do not dominate. Their monopoly is broken. The family still possesses enormous wealth, approximately £110 million in 1875, but the trajectory is wrong. They are losing market share, losing technological advantage, and losing the political relationships that made them indispensable. The flaw in their model is becoming clear. They built a fortune on financing European governments in a world where governments were the primary economic actors. But the world is changing. Corporations are becoming more important than sovereigns. America is rising while Europe is fragmenting. The gold standard is eroding their exchange rate arbitrage. They built the perfect machine for the 19th century. But the 20th century will require different tools, and they are not building them fast enough. The year is 1914, and the Rothschilds face the disaster they spent a century trying to prevent: total European war. World War I destroys the system they built. The gold standard collapses. Government bonds become instruments of national survival rather than profitable investments. International finance stops functioning across enemy lines. The five-house coordination strategy becomes impossible when Britain and France are fighting against Germany and Austria. The London House, led by Lionel's son, Nathan Meyer Rothschild, supports the British war effort. They help underwrite British war bonds and coordinate Allied financing. The Paris House, led by Edmond de Rothschild, does the same for France. But the Vienna House, led by Louis Nathaniel von Rothschild, is supporting Austria-Hungary. The family is literally financing both sides of a war for the first time, not by choice, but by necessity. The financial damage is catastrophic. Austrian bonds become worthless when the Austro-Hungarian Empire collapses in 1918. Russian bonds, in which the family held significant positions, become worthless when the Bolsheviks repudiate all Tsarist debts in 1918. German bonds collapse under hyperinflation in 1923. The French and British bonds the family holds survive, but are deeply devalued by wartime inflation. Between 1914 and 1925, the Rothschilds lose approximately 40% of their wealth. The family fortune, which peaked near £150 million in 1900, falls to roughly £90 million by 1925. They remain extraordinarily wealthy, but the trend is devastating. For the first time since 1815, the family is getting poorer rather than richer. The Vienna House never fully recovers from World War I. The Austro-Hungarian Empire's dissolution eliminates the political structure it was built to serve. Louis Nathaniel attempts to transition to financing the new Austrian Republic, but the hyperinflation of the early 1920s destroys Austrian currency stability. Vienna House becomes a shadow of its former power. Frankfurt House faces similar collapse. Post-war Germany is politically unstable and economically chaotic. The hyperinflation of 1923 obliterates bond values. The family's German holdings become nearly worthless. The Frankfurt House closes its banking operations in 1901, long before the war, recognizing that Germany's rising industrial banks have made the Rothschild model obsolete there. Meanwhile, American finance is surging. J.P. Morgan finances American industrial expansion and becomes the dominant force in international finance. When European governments need loans during World War I, they increasingly turn to American banks rather than the Rothschilds. The center of financial power is shifting from London and Paris to New York. The Rothschilds attempt to adapt. They establish relationships with American banks. They invest in emerging industries: oil, chemicals, aviation, automobiles. They hire professional managers rather than relying exclusively on family members. But these adjustments come too late and too slowly. Other banking houses are already dominating these new sectors. The rise of anti-Semitism creates direct threats. Louis Nathaniel is arrested and held for ransom. The family pays $21 million, an enormous sum even for the Rothschilds, to secure his release. He flees to America. In France, the Vichy government collaborates with Nazi Germany. In 1940, the Paris House is seized. Edouard de Rothschild flees to America. The family's art collections, wine estates, and properties are looted. The Nazi steelworks by Vermeer, Gainsborough, and other masters from Rothschild's collections. Some are never recovered. Casey, the London House survives because Britain remains free. But even there, the family's influence is declining. The British government nationalizes the Bank of England in 1946, reducing the Rothschilds' role in British finance. Post-war reconstruction is financed through new institutions like the World Bank and IMF, not through private banking houses. By 1950, the family's wealth is estimated at £70 million, less than half the peak. The five-house system is effectively dead. Vienna and Frankfurt are closed. Paris and London continue operating, but at dramatically reduced scale. Naples closed in the 1860s, but the family doesn't collapse entirely. They adapt by diversifying into different sectors. The London house becomes N.M. Rothschild and Sons, focusing on corporate advisory services, mergers and acquisitions, and asset management. The Paris house, reopened after the war, moves into similar services. They stop being primarily government bond underwriters and become investment advisors and wealth managers. The strategy works well enough to preserve wealth, but not to restore dominance. By the 1970s, N.M. Rothschild and Sons is a respected, but not dominant, investment bank. They arrange important transactions and advise major corporations, but they are one firm among many. Goldman Sachs, Morgan Stanley, and other American banks are far more powerful. The family remains wealthy. Various Rothschild descendants are billionaires. But they are rich individuals, not controllers of European finance. The empire fractured. The coordination dissolved. The monopoly vanished. The historical irony is complete. The family that financed European governments for a century is undone by the wars those governments wage against each other. The system they built to profit from European stability is destroyed by European instability. The network they created to transcend national boundaries is shattered by nationalism. The fortune they accumulated in bonds is demolished by inflation and default. The fall is slow rather than spectacular. There is no single Waterloo in reverse. Instead, there is steady erosion. World War I destroys Austria and inflames Germany. The interwar period sees hyperinflation and economic chaos. World War II brings Nazi seizure and looting. Post-war reconstruction marginalizes private banking. By the 1960s, the Rothschilds are historical footnotes rather than contemporary power brokers. Descendants maintain the name and significant wealth, but the empire is gone. It's 5 arrows pointing in different directions. The family symbol no longer represent coordinated power. They represent scattered legacy. The year is 2025, and the Rothschilds no longer rule European finance, but the architecture they built survives and thrives under different names. The family's actual power is vastly diminished. Their legacy's power is everywhere. Start with government bonds. The Rothschilds created the modern government bond market in the 1810s and 1820s. Today, that market is worth over $130 trillion globally. Every principle the family established, issuing bonds at discount, selling them to distributed investors, creating secondary markets, establishing credit ratings, still governs how governments finance themselves. The U.S. Treasury issues bonds using mechanisms the Rothschilds pioneered. The European Central Bank manages debt using concepts the family created. They lost their monopoly, but their invention became the global standard. Central banking reflects Rothschild influence. The family didn't create central banks, but they established the model of private institutions managing government debt and currency stability. The Federal Reserve, established in 1913, operates on principles the Rothschilds practiced, serving as a lender of last resort. Managing gold reserves, coordinating international finance, and maintaining relationships with political power while claiming independence from it. The difference is that central banks are government-controlled monopolies rather than private family enterprises. The international coordination the 5 brothers pioneered became the blueprint for global finance. Today's investment banks, Morgan Stanley, Goldman Sachs, J.P. Morgan Chase, all operate international networks coordinating capital flows across borders. The Rothschilds proved that information asymmetry, faster communication than competitors, and coordinated action across jurisdictions create unstoppable advantages. Modern banks use fiber optic cables and high-frequency trading instead of carrier pigeons, but the principle is identical. Investment banking as a profession is a Rothschild creation. Before them, banking meant taking deposits and making loans. The Rothschilds pioneered underwriting securities, advising on transactions, managing risk across portfolios, and charging fees for expertise rather than interest on loans. Every modern investment bank is fundamentally doing what the Rothschilds did. It's intermediating between capital and opportunity, charging for access and expertise. The family's strategy of financing both sides of conflicts has become standard. Modern weapons manufacturers sell to multiple nations simultaneously. Investment banks advise competing companies in the same industry. Private equity firms own portfolio companies that compete against each other. The Rothschild logic, profit comes from the transaction, not the outcome, is now universal business practice. Political influence through debt dependency has become the primary mechanism of international power. The IMF and World Bank impose policy conditions on debtor nations, just as the Rothschilds once advised governments on financial policy. China's Belt and Road Initiative uses infrastructure loans to gain influence over debtor countries, exactly the Rothschild model applied at national scale. The family proved that controlling credit means controlling policy without needing military conquest. Even the conspiracy theories survive and mutate. Modern anti-Semitic propaganda still references the Rothschilds as shadowy puppet masters. Despite the family's actual power having declined dramatically, Queen theories incorporate Rothschild mythology. The family name has become shorthand for sinister hidden control, which is both completely false about current Rothschild power and revealing about how financial power actually works. It is hidden, it does flow through networks rather than hierarchies, and it does transcend democratic accountability. The irony is that while people obsess over imaginary Rothschild conspiracies, actual financial power has become far more concentrated and less visible. BlackRock and Vanguard collectively manage over $20 trillion in assets, far more than the Rothschilds ever controlled. But because they are corporations rather than a family, they attract less conspiratorial attention. The Rothschilds serve as historical scapegoats, while contemporary power operates with less scrutiny. The family's diversification strategy after World War II has made modern Rothschild descendants quite wealthy, but utterly different from their ancestors. They invest in vineyards, real estate, hedge funds, and philanthropic foundations. They are cosmopolitan elites, not financial empire builders. The name carries prestige, but not power. N.M. Rothschild & Sons still exists in London, now owned partially by the Rothschild family and partially by outside investors. It advises on mergers and acquisitions, provides wealth management services, and maintains a respectable but not dominant market position. In 2024, it advised on approximately £80 billion worth of transactions. This is significant, but nowhere near the dominance their ancestors wielded. The patterns the Rothschilds established remain. Information advantage creates profit. Coordination across jurisdictions provides arbitrage. Key: making yourself indispensable to existing power is safer than challenging it. And diversification across geographies and asset classes provides resilience. Modern financial institutions follow these principles because they work. But the moral questions remain unresolved. The Rothschilds profited from war, financed oppression, and prioritized wealth over justice. Modern finance does the same. Investment banks, fossil fuel companies, despite climate change. Weapons manufacturers profit from conflict. Private equity firms got companies to extract value regardless of worker consequences. The system the Rothschilds helped create rewards sociopathy disguised as fiduciary duty. The warning is clear. The concentration of financial power in few hands whether families or corporations, creates accountability problems democracy cannot solve. The Rothschilds were never elected, but influenced policy through debt dependency. Modern financial institutions do the same. Central banks claim independence from politics, but their decisions affect billions. The architecture is anti-democratic by design. What the Rothschild story reveals is that financial empires, unlike political empires, can survive for centuries precisely because they operate indirectly. Rome fell, the British Empire dissolved, but the financial mechanisms the Rothschilds pioneered, bond markets, international coordination, leverage, persist because they're infrastructure rather than institutions. You cannot revolt against a bond market. You cannot overthrow an exchange rate. The contemporary equivalents are obvious. American dollar hegemony functions like Rothschild network dominance once did. Control the currency everyone needs, and you control trade flows regardless of who holds political power. Tech platform monopolies function like Rothschild information advantages. Control the communication infrastructure, and you see everything before anyone else. The names change, but the mechanisms persist. The lesson is not that powerful families secretly run the world. The lesson is that power in modern systems flows through financial mechanisms that transcend individual actors. The Rothschilds were brilliantly positioned to exploit 19th century European finance. When that system changed, their power declined. But the system they helped build, where money flows across borders faster than democratic accountability, where debt creates dependency, where information asymmetry generates profit, that system is stronger than ever. 5 brothers left a Frankfurt ghetto and created the template for modern financial power. They understood before anyone else that information, coordination, and credit would matter more than gold, armies, or land. They built an empire that survived revolutions, financed wars, and made governments dependent on their capital. At their peak, they controlled more liquid wealth than all European governments combined. But they also proved the limits of financial power. When the political order they depended upon collapsed in the world wars, their empire fragmented. When American industrial power surpassed European sovereign lending, their business model became obsolete. When nationalism trumped internationalism, their cross-border coordination became a liability rather than advantage. The central paradox defines them. They escaped oppression in the ghetto only to become financiers of other people's oppression. They used their outsider status to build an insider empire, then spent that empire defending the very systems that once excluded them. They proved that wealth without values is just accumulation, that power without accountability is just influence, and that dynasty without adaptation is just delayed extinction. Today, the Rothschilds' name carries mythological weight, far exceeding actual power. But the architecture they built, government bond markets, international investment banking, central bank coordination, information-driven trading, assists as the foundation of global finance. They lost their monopoly, but won the broader war. The financial world operates on principles they established. The pattern they revealed remains active. Those who control credit control nations. Those who move information fastest profit most. Those who make themselves indispensable survive longest. BlackRock, JP Morgan, the Federal Reserve, and the IMF are all executing Rothschild strategies under different names. The empire dissolved, but the empire's methods became universal. The question for our time is the same one the Rothschilds faced. Can concentrated financial power serve anything beyond itself? They chose wealth over justice, stability over change, existing power over emerging movements. Modern finance makes the same choice daily. The system rewards extraction, punishes solidarity, and insulates power from democratic accountability. The Rothschilds proved you can build an empire on information and credit. But they also proved that empires built on pure accumulation, absent broader purpose, eventually become obsolete. Their wealth survives in scattered descendants. Their power dissolved into history. their shadow, a architecture of international finance they created, remains the invisible government of the modern world. The real Rothschild conspiracy is not that a family secretly controls everything. It is that they built systems of control that no longer require them. The nightmare is not that powerful families exist. The nightmare is that the mechanisms they pioneered, debt dependency, information asymmetry, coordinated extraction across borders, has become the normal operation of global capitalism. We live in the world the Rothschilds built. We just call it the international financial system instead of calling it by their name.